Well, headline inflation has increased to 4.8% in August, and this is better than the 4.9% expected. However, there are concerns that this may cause the Reserve Bank to increase interest rates once again on Thursday. ENCA business anchor Rofhiwa Madzena is in studio with me to discuss this and take this conversation forward. Rofhiwa, good morning to your colleague. When we talk inflation, it is up, but what were some of the big contributors?
A very good morning to you, Dumelo. So indeed it is up, and that, as you mentioned in your intro, was a little bit better than what was expected by economists, that it would be up by 4.9%. And some of the big contributors here continue to be households paying more for electricity, for water, property rates going up in the period as well. Even though we are seeing a slowing rate of increase in food prices, that has not filtered down to what the consumer is ultimately paying at a grassroots level. So that had an impact on the inflation data that we saw. But one of the biggest ones here is that price of Brent crude that has been higher than usual over the last few weeks, that impacting the value chain which relies on fuel. And those are your major industries and your producers of food and other related products. And that, of course, had an impact on inflation. And another one which is quite worrying, we were plunged back into stage 6 load shedding just a short week ago, that the Reserve Bank has indicated on a number of occasions that will contribute to the inflation number overall. But I suppose it's good news that it remains within the target band of between 3 and 6%, Dumelo.
Yeah. Rofhiwa, then what is this spell for interest rates which will be announced tomorrow?
So this is an interesting question because many have said that the Reserve Bank will continue to leave interest rates on hold. The problem is that not only did we see an uptick in inflation for the month of August, but we are seeing that the United States has indicated that it could increase rates one more time, given the economic data that recently came out of that economy. Even though you are seeing a decrease in a decrease in inflation in the global community, there are concerns about curbing it and taking it under control. So the Reserve Bank, taking into account our pressures, including being a net importer of fuel, the electricity issues that we're facing, alongside the global and the geopolitical developments that we're seeing, this may inform the Reserve Bank, which, by the way, concludes its meeting ahead of those interest rates decision that will be made tomorrow. And of course, in the United States, a similar meeting taking place this afternoon.
But also, under the same breath, Rofhiwa, perhaps give us some clarity. What are some of the risks that could push inflation further?
So we are seeing the price of Brent crude being the biggest contributor at the moment, or one of. And the issue here is that we're waiting to hear from the OPEC plus community. These are your oil-producing nations, which would include Saudi Arabia, on the production cuts that they are committing to. So that would reduce the supply in the market, which would then help with the price of Brent crude that we are seeing. Another contributor here will be that electricity crisis that we're facing. That, as I said, the Reserve Bank indicating that it is contributing in real terms to inflation in South Africa. And of course, it is forcing production from the entire value chain all the way to the retailer and the supplier, the distributor, to increase their prices, and then consumers then having to go to their employers to ask for salary increases, and that of course pushes up inflation. And the idea here that the Reserve Bank is increasing interest rates by is to make sure that we lower that demand so that inflation can come down, and that's basically what we're looking at in terms of those risks for the medium term.
But can South Africa, under the same breath, can South Africa absorb another interest rate hike?
Short answer, no.
Yeah.
So it is, one economist described it as a short-term pain for long-term gain. We've had 10 consecutive interest rate increases since November 2021. And I think it's safe to say that South Africa has endured the short-term pain. I think we started to see the fruits of the decisions that have been made by the Monetary Policy Committee when we saw inflation come down to below 5% in the previous print. So those So those initiatives are starting to bear fruit, and many economists anticipating that the Reserve Bank doesn't need to increase interest rates further. In fact, we have reached the target or the ceiling, and we can just leave things be for a little while before we look at bringing them down. But I always say you never know with our Monetary Policy Committee and the decisions that they make. They've been very harsh on us over the last few months, so one can only imagine what it is they'll do to curb inflation in South Africa.
We'll have to wait and see, I suppose, Rofhiwa. But thank you so much, Carly, for bringing us this news and this issue to the fore, but also giving us context with regards to whether or not, we can expect that hike or not tomorrow. The short answer, though, is for most South Africans, they don't want it. They're hoping not to have it. But we have to wait and see what the MPC has to say tomorrow. Business anchor Rofhiwa Madzena, thank you so much, colleague, for this context.